Good evening, all. I'm Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, the 28th of August, 2024. Well, today the market was sitting there on pins and needles waiting for NVIDIA. The earnings came out. I'll cover all that in detail in the financial market update, if you will, and in the SPDR ETF. I won't deal with it here except to say that the market was down going into the report a couple of percentage points, and it probably lost another 7 or 8 in the aftermarket at one point. So it got to the 10% correction. It could have gone either way, up or down. And no, the company looks like it's doing everything fine, but I'll talk about that there. You can see the indices. They're all over the board right now. The NASDAQ down because you are seeing that. CrowdStrike is down as well, and that's weighing on these markets there. The gold up. The silver-gold spread is going this way again, where the gold is gaining slightly on the silver. I'll show you that in a minute. You can see that the energy market's still paying attention to what's going on in China. UBS today came out and they lowered Chinese growth estimates for 2024 and 2025, so that is important as well. Let's take a look, if we could, together at what we've got tomorrow. Tomorrow we get the second look at the U.S. second quarter GDP. It should show the economy grew around 2.8%. quarter over quarter, compared with the advanced report of 2.8%. So not looking for much of a change of anything. U.S. weekly jobless claims, they're due out at 7:30. They're still looking for about a 230,000 number. National Association of Realtors, U.S. pending home sales come out at 9. They're looking for a 1% increase from what I saw. Energy analysts are forecasting the EIA natural gas storage report's going to show about 44 billion cubic feet of injections, and that goes against 28 a year ago week in the average of 43. So that's not going to be much of a report that I think moves the market. When you take a look at gold, if you were to finish right here, you're very close to what? All-time high close. You are down for the moment about 0.3% on the week. When we take a look at the action, you couldn't clear that high, and now you have a big outside day down as of today. This is tonight's action. So until this high is taken out, the market seems to be saying it wants to pause until that high is taken out, in my estimation. The pattern on the chart is a higher high and a lower low on this brown line, which is an indicator I wrote to tell me is the market trending. A trend would be a downtrend, lower highs, lower lows. You don't have that. You have a higher high and a lower low. When we look at where support is, it's back at the 18-day average of close. You've also got the 100-day average and the 200. And the Bollinger Band, well, it stopped the rally back here. You came back up to challenge that, as you could see, and you really haven't gone anywhere at this point. More important to me is what the slow stochastics are doing. So let's go back, if we could, and not include tonight. On the close Wednesday, you had a 79 reading, not under 79. The day before, you had 80 readings. The day before that, 80 readings. And the day before that, 80. So the market, when we got over to today, Wednesday, you started flirting with losing the embedded reading. The number has to close under 75 for it to be lost. So it's, even though you're up tonight, it's losing that. And if it stays lost, and I think another thing you tie into that is the high of the outside day. If that's not taken out, the odds favor you're going to try to drift back down towards that 18-day average of closes. So if you were long, probably a good spot to be coming out. And no, it's not a go short signal. When you look at the gold-silver ratio, you can see that you've cleared this high, so you might get back to the differential of 86.5, the 18-day average of closes on the two. When you look at silver, as I've been telling you, you're fighting a battle here from the 100-day average in green to the Bollinger Band, and normally you don't succeed on the first rally over that 100-day. The market comes down from there often. The market got itself overbought, never really did embed, and I think it's headed back towards the 2,900 level to get its legs. When you look at the copper market, well, here you did get an embedded reading, and let me show you what happened. Both numbers over 80 on the close, both over 80 on Tuesday, both over 80 on Friday too. Nope. Monday, Tuesday, Wednesday. And tonight, you're quickly losing that reading. If it stays lost, the first goal is the closest main moving average, which isn't far away. It's 419.50, which is the 200-day average. And then from there, the 18 at 415.50, but you've lost upside momentum. In the platinum market, you went up and challenged recently the 100-day average. You were playing at that down to the 18-day. You had one spurt up, hit the Bollinger Band, reversed the next day, and this is what you've been doing ever since. Basically, the metals are saying they've had a nice run up. They need consolidation is the way that I'm viewing them. And in the dollar, you have a market that's embedded, had a good rally today. How it performs tomorrow determines if you should go short. I'll cover that in my morning subscriber video because I want to see it reopen, what it does with the stochastic. Then I'll make up my mind what to do with that. And you know, one of the things you're seeing me do right here, and we can get to this real easy right over here, is I'm talking technical indicators. I use 5. And the 5 I use are moving averages, slow stochastics, a swing line that I created, window envelopes, and Bollinger Bands. But I also look, and you'll hear me talk, inverted head and shoulder, you've got a wedge formation. I really believe in moving averages. I love oscillators, and that's why I use the slow stochastic. You might use relative strength or MACD. Some people like market sentiment. I've never been a big fan of it. Then cycle people love Dow, Elliott, and so on. We cover all that in this booklet that you have. This booklet, by the way, I put together with the folks from Modern Trader, which was Futures Magazine many years ago. This is as good today as it was back then. So how do you get this? All you have to do is go to iraepstein.com. Free offers will be on the top left, or move your cursor to the top up here. You'll see a cursor for that. When you do it, you'll see an icon. Give that a click, and away you go. We send these out as a PDF, and while you're there, choose any other free offerings that you like. I'm Ira. Remember, you've got the Labor Day holiday coming. The market's going to go into a slowdown mode now. And remember, you have limited trading come Monday, and then we're back to business on Tuesday of next week. You take care.